Hi there everyone, and welcome to the Traders Circle weekly market update. In this video I'm going to be talking primarily about US markets because that's all that seems to matter for the Australian market at the moment. But before I do, you do need to be aware that whatever I say is general advice only, and you have to consider whether it's appropriate for yourself. We've seen confidence on investment markets around the world being shattered across the past few weeks. We've seen big sell-offs in the Australian stock market. That's followed sell-offs in the US stock market. There's been sell-offs in other markets, although some European markets are remaining quite resilient. A lot of this selling has come with Trump and his destruction of one, investor confidence, but two, also consumer confidence. We've seen US consumer confidence dip quite a lot for the month of February, and we've also seen forward growth forecasts, partially based on that confidence, really start to come off as well. So with consumers less confident, with investors less confident, we've seen selling hit the market. There's probably good reason why we've seen a dip in confidence, and that is we've seen some pretty controversial and potentially damaging policy moves by the new US government. I'm going to touch on that a little bit later in this presentation, but I just wanted to say that for the average person, they're starting to lose a bit of faith in the global share market rally that's lifted just about every share market on earth for the past 18 months. And to be honest, I think that's quite valid. Politics aside, we've seen prices get to pretty unbelievable levels, and for further gains to be made when valuations are at record levels, you do need people to have a belief that the future is going to look brighter than today. And I think that drop off, that drop in confidence is really sort of adding fuel to the fire for what we've seen over the past couple of weeks. Now, one of the big reasons we've seen a bit of a drop in confidence is tariffs. Trump has increased tariffs on the Chinese. They're going to increase them again tonight. The tariffs are going to be placed on Canada and Mexico tonight as well. And then we're going to see some reciprocal tariffs against other trading partners placed across the next week. Tariffs are failed economic policy. Plenty of research suggests they're not very effective in you know, basically causing positive economic outcomes. The one thing that you could say is maybe they're a good bargaining tool, or maybe they could be used to fast forward the restructuring of an economy. I think looking for those potential reasons is uh, being too generous. You're being too charitable to a potential positive outcome from these tariffs. I think it's just basically bad economic policy. I think the American consumer is going to pay higher prices and receive worse economic outcomes as a result of them, as will consumers and companies around the world. Um, no surprise that we've seen markets sell off in advance of them, and it does look like those tariffs will be implemented tonight, and there's a fair chance we see some selling afterwards as well. I'm not surprised markets are worried about them, and I don't think there's any real positivity to them. So, uh, you know, as with Trump, you're never really certain. We could see some turn, some about face, some sort of deal reached where the tariffs aren't implemented and he scores some sort of victory for America, and that would be fantastic for the markets. But otherwise, I think we're going to see more volatility. Um, the risk for Trump in doing that, in creating some sort of deal, is that these later tariffs, these reciprocal tariffs that he's looking at later in the month, other nations don't take that threat as seriously, and they say, oh, we'll be able to sort of weasel our way out of it. So there's a risk in creating a deal again overnight with Canada and Mexico, but the risk in not creating a deal is that the markets continue selling off. Finally, I did want to finish on Trump. I've been extremely disappointed with the start to his term. We've seen the tariff threats. That's going to hurt the average American. It's going to hurt American businesses as well. You could argue it's some future business that's yet to exist might benefit from the fact that foreign competitors' imports are hurt during this tariff period. But I think it's a massive stretch. I think it's a massive stretch. We've also got the Doge Department of Government Efficiency cost-cutting program. The amount that they're cutting are so insignificant that it's just simply not worth the pain that it's causing. The obviously you've got different numbers being bandied about, but let's be extremely generous and say $55 billion, the sort of upper end of the amount of government spending being cut. That makes no difference to the US government spend. They just passed a budget resolution that's going to increase their debt by $2 trillion. And that by doing so, essentially by giving tax cuts to the rich. If they were serious about cutting government spending, they wouldn't have given those tax cuts. So, you know, 50 billion into 2 trillion is barely a dent. Um, it, it, I, I can't see the US government cutting spending. I think that's merely a smokescreen for implementing their own political agenda, which is basically cutting um, benefits and resources to the 99% and increasing the wealth of the 1% or even the 0.1%. And it was warned that that was what was going to happen, and that's what's happening now. So no surprise to me that markets are selling off with Trump. I think so far, 1 month in, it's not been very good. Um, you know, it's fair enough that you disagree with me, but I think we'll see. Um, the pudding, uh, the proof will be in the pudding. I would be surprised if he makes a term. I just don't think that you can head in this direction as rapidly and as quickly, and I don't think the public will sort of put up with it. So yeah, we'll see what happens, but it's been a pretty devastating start to the Trump term, um, and I don't really see things turning around in the short term at all. So the one saving grace for US markets is there is extreme amounts of liquidity, extreme amounts of government money printing, and that's only going to continue with the new Trump budget. Basically, he's increasing the government deficit in the form of tax cuts for the wealthy. So that's additional money printing from the US government, and that's going to flow to financial markets. And that's one of the reasons why we've seen markets be so strong is because they are printing so much money, and the debt is increasing at such a rapid rate. So that debt's going to accelerate. The growth in that debt's going to accelerate with Trump due to the tax cuts, and that's one saving grace for markets. That's an additional amount of essentially net government spend that's going to help prop up prices. It'll also prop up consumer prices. It'll also probably worsen inflation and decrease the likelihood of interest rate cuts. But it will also help keep up risk asset prices. So that is one saving grace for the market. So let's have a quick look at the charts for this week, guys. And this is the X-Show, the top 200 stocks on the Australian share market. And we can see that it's rallied up until the start of February, and we've come back off since then. We've broken the longer-term uptrend line. We still do have a longer-term uptrend in play, though, because we've still got the high peaks and troughs. And if we do sort of continue selling off a little bit in the short term, we do have a few support levels nearby as well. So the first downside target would be around 81.25, the 200-day moving average, and then if that breaks, we're looking back towards 80.60, which is the sort of low for the past sort of 6 months or so. If we break below 80.60, that's where we start to see some bearish trending. If we hold above that level, we're looking a bit more sideways. So technically a little bit uncertain, but definitely no longer as bullish as it was. We are a bit oversold in the short term, just looking at the stochastic. If we do manage to see a bounce up, perhaps with a reprieve on tariffs or something like that, I think we'll struggle to go beyond 83.70 in the next few weeks. So if we have a quick look at US markets as well, we can see that we've somewhat mirrored the S&P 500. That reached its own all-time high a little bit later in February, and since then it's come back off to a key support level, 58.50. Should they break below 58.50, I imagine we'll be seeing a move towards 5700. If they hold and bounce off 58.50, well then we're starting to look at a sideways channel at the top of the range here. That might mean a move initially to 6,000, and then if 6,000 breaks back to 6,100. Regardless, I do think things are starting to look a bit more negative. It's only the money printing from the US, the extreme net government US spend, that's keeping things higher. Because I do think we've seen a pretty sort of worrying situation develop with US political leadership. I'm not one to sort of just ramble on about these things normally, but I wouldn't say I'm a partisan commentator either, to be honest. I'm not just a leftist sort of who's been rambling on for the last 8 years about this. I just sort of say things are not looking that great. The developments have not been good. And if you disagree with me, that's absolutely fine. You're absolutely welcome to your opinion, and I'm happy to hear it. And I'm happy to support you having that opinion. But I just ask you, have you arrived at that opinion logically, or have you arrived at that opinion based on your partisan emotions? So I will wrap it up there for this week, guys. Hopefully not too controversial. Hopefully you've enjoyed it, and we'll see you guys next time.